After a spectacular crash, Tera is receiving a new lease of life with a Luna rebirth and is already living on the exchanges, but it has gotten off to a bad start. Backers of Tera voted to revive the failed cryptocurrency Luna last week, but with one big change. Luna is back without the element that caused the steep fall of the cryptocurrency 2 weeks ago, its stablecoin, USD. After reaching a peak of $19.53, €18.15, on Saturday, Luna dropped as low as $4.39 just hours later, according to CoinGecko. It is now around the price of $5.90. Tera 2.0 is coming, the company wrote on Twitter on Wednesday when it announced the news. They wrote, with overwhelming support, the Tera ecosystem has voted to pass Proposal 1623, calling for the genesis of a new blockchain and the preservation of our community. A new version of the collapsed Luna cryptocurrency is already live on major exchanges, and it's gotten off to a bad start. Last week, supporters of the Tera blockchain project voted to revive Luna, but not Tera United States dollars, a so-called stablecoin that plunged below its intended peg to the dollar, causing panic in the crypto market. Teraust, or USD, is what's known as an algorithmic stablecoin. It relied on code and a sister token, Luna, to maintain a $1 value. But as digital currency prices fell, investors fled the stablecoin, sending USD tumbling and taking Luna down with it. At its height, the old Luna, now known as Luna Classic, had a circulating supply of over $40 billion. Now, Luna has a new iteration, which investors are calling Tera 2.0. It is already trading on exchanges including Bybit, KuCoin, and Huobi. Binance, the world's largest crypto exchange, says it will list Luna on Tuesday. Its launch has not gone well. After reaching a peak of $19.53 on Saturday, Luna dropped as low as $4.39 just hours later, according to CoinMarketCap data. It has since settled at a price of around $5.90. Analysts are deeply skeptical about the chances of Tera's revived blockchain being a success. It will have to compete with a host of other, so-called Layer 1 networks, the infrastructure that underpins cryptocurrencies like Ethereum, Solana, and Cardano. Tera is distributing Luna tokens through what's called an airdrop. Most will go to those who held Luna Classic and USD before their collapse to compensate investors. But many investors burned by the debacle are unlikely to trust Tera a second time, experts say. Vijay Iyer, head of international at crypto exchange Luno, said there's been a massive loss in confidence in the project. The original Tera chain has been rebranded as Tera Classic and Tera has been relaunched as Tera 2.0. As of last week, developers behind failed stablecoin Teraust have voted to abandon the token in favor of creating a new blockchain and digital asset weeks after the cryptocurrency collapsed. Tera Luna Classic, LUNC, rallied over 60% in the past 24 hours to $0.00013, as per CoinGecko, after the newly launched coin crashed within hours on day one of its trading on May 28, when Tera launched a new chain airdropping Luna 2.0. CoinMarketCap had notified investors on its website after the launch that due to the depegging of USD, Luna was experiencing extreme volatility and asked the investors to therefore proceed with caution. Crypto exchange Binance said in a tweet that it will list Tera 2.0 Luna in the innovation zone and will open trading for Luna USDT and Luna BUSD trading pairs at 6 a.m. UTC on May 31. Under a measure approved earlier this week, the original blockchain was split off and be known as Tera Classic, while Luna, which plunged close to zero this month, was renamed Luna Classic with the ticker LUNC. The new Tera blockchain won't include a stablecoin. Under the recovery plan for the Tera ecosystem, developers said they will create a new Tera blockchain with a revived Luna token. Under Do Kwon's newly approved structure, the original blockchain will be known as Tera Classic, while its native token Luna, which plunged close to zero this month, will be renamed Luna Classic with the ticker LUNC. The new Tera blockchain has started running a coin under the existing Luna name and ticker and does not include the Teraust stablecoin. Tera backers will distribute the new Luna token to Luna Classic and USD holders. According to Tera, Tera 2.0 will effectively create a new Tera chain without the algorithmic stablecoin. The old chain will be called Tera Classic and the new chain will be called Tera. The chain upgrade will commence a few hours after the launch snapshot, Tera announced on Twitter. The new Tera effectively creates a new blockchain associated with the Luna token. The old Luna will be replaced by Luna 2.0, completely severing ties with the failed stablecoin. But the old Luna will not disappear completely, it will simply coexist with the new and improved 10% will go to those who held dust before the collapse of the cryptocurrency, 25% will go to traders who still own Luna and dust after the crash, and 30% will go to a pool of Luna investors. Tera will become a completely community-owned chain. Crypto entrepreneur Do Kwon's attempt to resurrect his failed altcoin Luna flopped on debut, sparking concerns that the new token's future was over before it began. Almost as soon as the Terraform Labs CEO airdropped deposits of his new token, dubbed Luna 2.0, into users' virtual wallets this weekend, holders rushed for the exits in an attempt to salvage what little they still could do from their original investment. The value of the new coin promptly plunged 80% to around $5, revealing what little faith the Luna community still had in the governance token. Earlier this month, its predecessor, now traded separately as Luna Classic, had entered a death spiral that sent it to zero. The execution of the airdrop, which favored those that held Luna before this month's collapse over those that subsequently bought in after the collapse, was marred by problems, according to holders. For one, certain crypto exchanges did not yet support trading in the new coin, limiting demand and preventing many from selling their newfound deposits. But ultimately there was precious little time, and no alternative after Do Kwon put his rescue plan forward for a vote. Shortly, the new altcoin resulted from a hard fork in the protocol collectively approved by the community through a majority vote last week. This created a new blockchain that branches off from the existing one, similar to the 2016 decision that created Ethereum and Ethereum Classic each with their native tokens, respectively. One core problem is that the utility of the new Luna 2.0 token is in doubt, a genuine problem when faith in its predecessor had already been obliterated. Leading crypto exchange Binance, for example, is listing the coin on its innovation zone for particularly risky investments. After the massive Luna crash, the cryptocurrency market was deeply shaken by the loss of $60 billion, 55.8 billion euros. And yet, it appears investors are intrigued by the Luna rebirth. Luna surged more than 20% on Wednesday after Tera's announcement, according to data by CoinGecko. Even USD was up over 50%. Getting rid of the stablecoin that made Luna crash in the first place could increase the possibility of the new crypto being successful, but anything goes in this volatile crypto market. According to CoinMarketCap, Luna 2.0 is currently trading at $6.47, down from an original price of $17.80 when it launched on Saturday. That's all for today. Hit the subscribe button and let us know what you think about Tera Luna's new stablecoin. We'll be back with freshly brewed content again. Stay tuned.